Good morning, everyone. It is Friday, June 11th, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Mr. Brian Caprice. Brian and I are going to take a look at some hot spots in the markets today, or some potential hot spots where you might want to be looking for potential opportunity or for volatility. Before we jump over there, we do need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we going to be talking about today? Well, one, we're seeing US dollar strength following the inflation numbers from yesterday. The Fed's apparent willingness to do nothing for the time being, that this is going to be transitory. Even on the heels of those numbers, we are seeing US dollar strength. So we'll take a look at the euro US dollar. You can actually see it there overnight, a pretty dramatic move down in the euro US dollar pair. That is US dollar strength. We're going to take a look at how that has been impacting the gold market, because gold made an interesting move following the announcement, and there's a reason why it's doing what it's doing. Again, you're watching it play out in the Forex market, but we're also watching it play out in the commodities market. And then lastly, we'll do a quick little we'll take a peek around US equities, mostly because this morning at 10 a.m. Eastern is the consumer sentiment number. Now, if you're not familiar with the consumer sentiment, it's a survey, and it's designed to include all U.S. households outside of, I think, Alaska and Canada, but it's how consumers view their own financial situations, as well as how they view the prospect for the broader economy. That could potentially move equity markets this morning. So with that, Brian, let's take a look at what's going on in the euro following the inflation numbers yesterday.
Yeah, I would say right now, again, getting the broad view of things, you can see that the euro has definitely got some weakness coming into it. In the last 24 hours, it's down about 50 pips. And again, that's a decent bit of movement. And it's been retracing a little bit, right, in the last about, a couple hours. Besides that, you're seeing more or less dollar strength. And again, it has to do with yesterday's, the news that we saw. Again, the only thing that we're not seeing necessarily dollar strengthen is versus the pound. And I think that's important to bring up, particularly when we're talking about the euro, because we are seeing the euro pound down quite a bit, although retracing in the last hour as well. So a lot of this, again, all has to do with yesterday. And I think talking about the dollar index is really kind of where it all starts off. I mean, that kind of it tends to be the leader. Obviously, the black arrow is the European session. You can see since the European market opened, they've done nothing but make the dollar more expensive. And it's been quite healthy. It's with an impulse correction, impulse correction, impulse. And we're kind of in a correction phase right now. If you look to the left, again, I have a zone just a little bit higher. We're not trading this, but you can see that we had a pretty big racetrack to the downside. So it doesn't really give us a lot of idea of where the sellers are really trying to step in at. But, and I say but, we need to start focusing on that session open, because again, that's another one of the popular reversal times is when the U.S. trader comes online right about now, the 8:30, 9 o'clock window, and we're starting to see a bit of a pullback. So we do have a little bit more room to run on the dollar index, and keep that in mind. So euro dollar, you can see heading straight down. And again, European session started right here where we had the arrow, and is done nothing but head straight down. And again, also healthy. Impulse correction, impulse correction, impulse correction. The exact kind of mirror image of what we saw in the dollar index. Now, just like the dollar index, again, dollar index needed to go a little bit higher before we had an area of sellers. This one had a little bit farther down to go. And you can see we're in a racetrack. So again, there's no true sellers here. And again, this is almost like we took the chart and just flipped it upside down, right? That's how close that the euro dollar tends to look, kind of mirror the dollar index. So it's a way to kind of get a little bit of a foreshadow of what's going to happen. But I think 121.12 is an area that we want to watch out for. As I said, there'll be profit taking. This is actually I want to make sure I tell you the exact move, but it's 71.2 pips to the downside since the European Open. The daily ATR right now is only about 63. So it's technically put in over its average move already today. Okay. Being a Friday, again, I would expect there to be some type of reversal. Again, it's the weekend, it's party time. 121.12 is an area where I think is pretty decent. And again, there was definitely some buyers sitting down on that level. The question is, will the session break kind of front run us here? That's kind of the one issue that we're worrying. But consumer sentiment will help that a little bit. Remember, consumer sentiment is good. That means people are spending money. That means good for the overall economy. But if it does provide some weakness, again, that's where the retracement will occur. And it's sometimes this happens. It's always a shame where you get that reversal just a bit before. But I think that's the level to watch out for is the 121.12.
Yeah. So, I do want to just flip this over here. I just wanted to take a quick peek. We do have some call spreads that might be interesting, depending upon how you want to play this. Because as they printed for this particular set of call spreads, remember you're not knocked out if you're. In fact, sometimes people trade them outside of the ranges. If you were looking for a retracement here in the euro US dollar, I mean, there are ways to do this in a very limited risk, limited reward way. If you were expecting this to come back at all, your downside loss would be low, and if it were to continue rally. However, if you thought this were going to continue, that this was, we've seen the sell off, the pause, the sell off, the pause. This could just be profit taking that we're seeing right now from European traders who sold it overnight. They're just going to get out, and if this is going to continue lower, then there might be other opportunities that you could do where you could take a short position. Again, if it were to rally, your risk is limited. And if it were to go down, you'd have some profit potential. So I guess it all depends on how you want to play this, whether you want to play it with the binary options or whether you want to potentially look over at some call spreads. We'll see how that plays out once the U.S. retail trader gets in there. But right now, it clearly looks like the European trading session, there's some profit taking going on right now as they're getting to wrap up for the weekend. There was an interesting move associated with this. Let's take a quick look over at what gold did, because following the inflation numbers, gold spiked, but then as people digested it, it's done a bit of a rollover.
Yeah, and it makes sense. I mean, remember, there's going to be profit taking at everything. These little dashes. We were talked about this. This was the 2-hour window yesterday that basically the daily window we were looking at. You can see how fast it moved up, how many strike prices it went over. And I just left it on there because I thought it was a great visualization. And if you remember, I said, this is a different situation. The Fed hasn't necessarily changed anything yet, but everything is lining up for them to change. So we could expect a reversal, but was it going to be one of the standard reversals that we have? No, it should have already rolled back down again. And it's rolling, but now we're, kind of at an area right now. And again, it turned right at that 1903. That's an area we had marked off. We were looking for this one to, kind of, as a potential profit-taking area, and it did. It came up, it grabbed it. Again, a lot of basing sideways. And, the European session has driven it straight back down again. And is that profit-taking from yesterday's? It could be. I mean, why would you go into a position over the weekend if you don't need to? Has it retraced? Has it followed the rules all the way back down to the origin of the move? The answer is no, not really. It's still got another about $10 or $11. Will it be able to do it today? A lot of that's going to, really depend on how the U.S. trader feels. I would say that it has moved a lot already today. That's typically a telltale sign that we're not going to have the same type of movement. Remember, with oil, we have the little big scenario versus the big scenario. This was very, very much a news-based move. Nothing has fundamentally changed, but it's lining up and it's preparing for that fundamental change, especially with inflation. And if you look at some of the news, again, the news is an easy way to determine what is everybody else feeling, right? I mean, Yang is urging the U.S. to work to restore Chinese normal ties again. That's good. Russia has no plans to fully abandon the dollar. That's different, right, than what we've heard lately. When you look at other things on here, Germany is lifting their warnings going to different countries. GDP is doing great here. Australians are buying money left and right because it's the interest rate. It's the record low interest rate. So everybody's talking about it. It's one of those things. Will it continue to drop? Maybe, but my only word of caution would be after a big move in price to the downside, do you want to be the last person selling it?
Right.
Nothing really right now, nothing really justifies it. And we don't see any buyers really stabilizing or come in. And again, this was news based down to this level. So could it come down to 1876? Sure, it could be. Is it a high quality, is it a high quality trade? Do you have a well-established kind of risk level here? And again, I'll draw, let's see, where is it? Our fib tool. We'll come top to bottom. And you can see, even if I use kind of the top and bottom, you can see we're in that no man's land right now on a shorter kind of intraday basis. So, you know, it's kind of right in the middle. I would say it's not the strongest today. I would say that there will be somewhat of reversal, as well as, when the dollar index flips, gold will probably flip as well. It's just, looking back, it's very, very hard to be able to grab something in here. And, FIB people, it's probably right around a 50% retracement right now. I use the FIB tool for this, but if you want to throw it on yours, Todd, you're more than welcome to.
Let me just try. I just want to take a quick little peek here.
Yeah, it's probably around a 50% retracement, which is a common entry for people. They'll use a 50% retracement, 61.8 as their stop loss. It's probably right around that level.
It's exactly at that level.
Yeah, I mean, that's a level where
well played. That is actually rather. I mean, well, that's a good spot. I mean, here we are from the highs down to the low. We draw that 50. We are exactly right now. In fact, our 50% retracement level is the price that we're at right now. Which, interesting enough, there's a binary option right there that's trading right around 50.
Yeah. And like I said,
50% chance it's going to go up or 50% chance it's going to go down.
And again, we have the U.S. Open, so again, the profit taking may come in the next 30 minutes. It's not going to necessarily move tons. There's no news for then. So, that'll be an area that traditional FIB traders will throw in, right? 50%, 61.8 on the backside, as to know that they're wrong.
You're right. You might be. I mean, there might be this opportunity here for a quick little bounce or some support. This is the level that we would see buyers kind of step in temporarily. Maybe they get that bounce up here. What is this? We're right around 1889. Maybe there is we get a and it's pushing lower. It's trying to push through it. So I guess we'll have to wait and see.
This is the time you got to position, because if you think about it, the retail trade is coming in between 9 and 9:30.
Right.
If you're driving price down, typically it's so you can get a better entry for it. Retail traders will say, "Oh my God, it's negative in the overnight. We need to short. We need to ride this trend, right?
Sell it, right?
We need to ride this trend," and then that's where you tend to have those reversals. The problem is it's not really grabbing anything over here. So for me, like I said, I know people that do quite well with fibs, and particularly at 50% level. But typically, I like when it coincides with one of my levels, and I don't have a level there until much, much lower. So it is what it is. That's why I don't believe in the magical numbers, the fairy dust. But yeah, I know people do quite well, so I don't want to beat up on that. And again, this is one of those times where there's no sign for me that it's going to reverse yet. So
yeah. So yeah. Anyhow, that is rather interesting that we are roughly, and now we're actually pushing through that 50% level. Wow, maybe
it's trying now. You got a position now. So
right. So interesting. Yeah, that's kind of that helps. It's a great way to take a look at it. All right, so we've taken a look at the euro US dollar. We're seeing how that's also playing out over in the gold following the inflation numbers. Let's do a quick look because US equities, the S&P I think is near highs, all-time highs. I know that Nasdaq has been pushing up. I know Dow isn't near its 35,000, but let's just do a quick little peek. Maybe we get a feel-good Friday. I don't know.
Yeah, I would say, right now it doesn't look so much. This is where we were sitting yesterday morning, right before the news came out, and we had a level up top. We talked about 13,957. As you guys can see, I'll just extend this across for a couple different reasons, but you can see, is this more than a 1 to 3 risk to reward ratio? Yeah. What did it do? It retraced right back down to the origin of the move. So again, another parabolic move in here. It doesn't matter what asset class we're talking about. A chart is a chart, right?
Right.
And then since that time, all it did was it ground up, and we're stuck in that same area. Excuse me. And a bubble, I just wouldn't come out there. We're back in the same level. So again, it's definitely an area where the market is very interested in it. On a 15-minute, that's typically where we look for our trade entries at the open. And right now, again, we have to know that we are in an area. It's hit it multiple times at this point, so it's not like an automatic, hey, we need to go short. But a couple levels that I would be looking at is, we did have, let me get right back to the thing here. We do have kind of an area of basing right in here where, it's decent. There was a wick down, kind of grabbing a little bit lower, but it's an area that's been touched a few times, kind of in here and here and here and here again. So there's probably a short trade entry in here somewhere. It may look something like this, right? If we're able to get down there, remember, this is an if this, then that type scenario. It may be something along those lines. It may actually just be a little bit higher. But right now at the open, I would say that it looks like it's set up for probably a minor pop. Like I said, I like using the little kind of 30-minute candles. But as far as an if this, then that, I could be kind of swayed to go this direction. And the reason why is again, the inflation is there. It's not, we're not, and I brought this up just so we could all make sure we're on the same page. This is
I
Webster's
love it.
dictionary. The
This is
definition of
sarcasm.
yes, trending to pass away, not persistent. And we've seen that every single day. It's hard to not acknowledge it. And like I said, we're seeing dollar strength come in because people are preparing for that move. Remember, the reason the dollar goes up with strength with an interest rate change is because it becomes more attractive. You put your money in that country where there's a higher interest rate. Higher interest rates, because lending is more expensive, are bad for the indices. So as we're seeing that, Feel Good Fridays are great, but the more and more everybody starts talking about these higher interest rates and seeing continued inflation, not transitory, it sets us up more for a short. Now, so far, the market has completely shrugged it off. I mean, to push higher, it says, who cares? And then it dropped all the way back down again.
The equities markets have. The U.S. dollar has not. People are...
Well, and again, understand that the equities are based off the U.S. trader.
Right.
The dollar is Forex, which is a million times bigger than the US-based market. So again, that is more of a global picture of what's going to happen with the dollar, and it's a little bit less of a bias. Remember, you can manipulate the stock market. It's not that hard. To manipulate the currency market on a global spectrum, extremely difficult. Extremely difficult. So just a little bit difference between the two. So, I mean, seeing the dollar move, it means the rest of the world says, hey, they're going to raise interest rates. Our markets are like, hey, we're going to get everything we can out of this one, and it's just not quite there yet. So
actually, that actually gives me an opportunity just to put a quick plug in. If you're absolutely green and brand new to the Forex markets, the FX markets, the foreign exchange markets, the currency markets, whatever you want to call them, we are having a boot camp on June 22nd. How to day trade FX markets. It's going to be the basics as well as some more advanced concepts to understand exactly some of the things Brian was just mentioning. If you're new to FX markets, you might want to check that out and register. It is June 22nd, Tuesday. Register. If you can't make it, we will record it. And to those people who register, we'll make the recordings available. We'll even make the slide decks from the day available to people who register. So you might want to register for that boot camp that Nadex is doing in just over a week.
I'm not doing news. I'm gonna attend just to watch Chris Vecchio. I want to see what he says about news.
And Brian's speaking on parabolic moves.
Yeah.
We got Chris Vecchio from Daily FX. We got Michael Boutros from Daily FX. We've got it's going to be a good day. And you know what? A special incentive if you really like what Brian is doing, join that day. There may be some giveaways.
Yes.
So I'm just going to tease that out there.
Mm-hmm.
So for this morning, though, we've gone through U.S. strength, and we've seen the euro U.S. dollar getting hammered. We've seen a corresponding move the other way in gold. Actually the same way with gold rolling over after its spike up yesterday, and we're seeing equities sort of melt up a bit. We're not seeing any impact, but we do have that consumer sentiment number at 10 a.m. Eastern, where if the sentiment changes, we'll see how that impacts the U.S. markets. Could be some potential volatility, so be alert 10 a.m. Eastern. So in an hour. Brian, do you have anything else you wanted to share this morning?
Nope. No, I was just looking at some of the sentiments, but that's it. I'm going to let everybody get ready for trading.
Right. With that, if you got any questions for Nadex, please email us, customerservice@nadex.com. It doesn't matter what it is. We're here to help, but we can't help you if you're having challenges if you don't email us. 2, Brian is also available. You can catch him at support@keeptradingsimple.com. Please email him. If you got some questions, Brian is accessible, loves to interact with you and help you any way you can. And I think I did just run down everything we discussed today. Mm-hmm. Dollar strength, seeing the euro US dollar sell off. We're seeing gold roll over and sell off after its spike up yesterday. And US equities seem to shrug it off, melting up a bit, but pay attention, consumer sentiment, 10 a.m. Eastern this morning. With that, we want to wish everyone a good luck in the markets. Enjoy your weekend, and Brian and I'll catch you again on Monday. Thanks, everyone.